The Bitcoin maximalist would say that the problem in crypto is greed, arrogance, and foolishness. Okay, anybody that's investing in it is either greedy, arrogant, or foolish. So there's three constituencies that got taken for billions of dollars here. The VC investors put $2 billion into an offshore exchange. The exchange, just to be clear, was unethical and illegal from the very beginning. It's illegal to do what they did in the U.S., and it's unethical if you think I am front-running my customers, issuing a token, manipulating the price of the token, dumping it on them. Right?
If you did that in stocks, you're going to jail if you front-run.
It's absolutely illegal.
Yeah.
Right? FTX was its own regulator, its own market maker, its own exchange, the issuer, right? All at the same time.
The market is still trying to bounce back from the demise of FTX and its venture arm, Alameda Research. Sam Bankman-Fried, like Do Kwon, is unlikely to face serious consequences, at least for now. Following his virtual keynote at this week's DealBook Summit, the former FTX CEO spoke with BC News' George Stephanopoulos. Sam Bankman-Fried stated he didn't spend any time at FTX handling risk management. The disclosure exposes that Sam Bankman-Fried was extraordinarily careless in running and trading a massive enterprise like FTX without any risk management plan or strategy. Not only has SBF made such admissions, but the online community has also discovered an interview with Caroline Ellison, co-CEO of Alameda Research Fund, in May 2022. As a result, in that interview, Caroline Ellison indicated that she did not believe in utilizing stop-loss orders when trading. Michael Saylor actually has a pretty interesting and insightful explanation of how SBF, FTX, and Alameda operated, which he highlighted in a new interview on the PBD Podcast with Patrick Bet-David. The billionaire tech executive says the downfall of FTX was mostly caused by greed and the desire by many investors to mail quick cash, without bothering to conduct due diligence on the now-collapsed crypto exchange. The recent collapse of different crypto firms has surely solidified Saylor's belief that Bitcoin is the only safe asset to invest in. The Bitcoin maximalist who only invests in Bitcoin recently tweeted that no force on earth can stop Bitcoin when the time has come, while sharing an image of a graph revealed by social media marketing and management platform Hootsuite, highlighting the percentage of internet users across the world who own a form of crypto. Before we listen to Michael Saylor's new interview, please ensure to smash the like button and consider subscribing if you are yet to do so. Thanks for watching our videos. We appreciate you so much.
But the three constituencies are the VC that put the $2 billion into FTX. They were supporting basically an offshore, unregulated casino, running in opaque fashion, account of the interest of its own customers. They didn't ask for a board seat. They didn't do due diligence. They were chasing what they thought was insane gains, right? So Sam basically, he scraped billions from unsuspecting investors in Silicon Valley. They should have known better. He took billions from crypto hedge funds and crypto banks like BlockFi and Voyager. They should have known better. Mm-hmm. And then he took probably $10 billion or more from depositors on his exchange. They have the best argument. It's like they were staring at terms and conditions that said he's not going to rehypothecate or use their assets. And he just, he lured them with the promise of cheap trading, high leverage. And, if you thought, well, Sam is manipulating the price of FTT and Serum and Solana, and he was, right? That's illegal and unethical, right? It's a pump and dump scheme. We talked about this before. But if you accept the idea that crypto tokens that are issued by some offshore, dude are okay, then you're thinking, well, I guess I want to go buy some of that and get behind Sam and Alameda because they're going to drive the price up. And I think Solana went from, $3 to, what did it go to, 50? It went way up, and FTT went to $50 a token or something. So you could have made a lot of money trading those tokens, but you probably would have wanted to go to the FTX exchange because, guess what? Newsflash, it's illegal in the U.S. Wow. Sam he's like the 14-year-old kid that stole the family car. He doesn't have a driver's license. He got 8 of his high school friends in the car, and then he found out that there's like $100,000 of cash, a bunch of drugs, and a gun in the car. And then they went joyriding for Saturday night.
Wow.
You know, and the entire thing ends, you know, horrifically with the car wrapped around a tree, half the people high.
But that analogy, I think it's very important to clarify that analogy.
And maybe he's an honor student in high school, but the point is he was not ready to drive the car. If he had 30 years of experience, if he was surrounded by 200 good attorneys and accountants and banking credit managers, then they would know what they don't know, and maybe they could have constructed a company that might have managed this amount of risk.
You're saying he's not smart enough to have conned people? You're saying he did that accidentally, or it was intentional, like knowing what he's doing?
I'm saying that he basically incompetently, foolishly, greedily, enthusiastically pursued what he thought was a good idea, but he didn't have the combination of the real world experience and the ethics and the legal understanding and the banking understanding to even know what he didn't know. So is it criminal? Absolutely, it's criminal. It's like if you roll over a bunch of people in a car and kill them all, it's illegal, right? But at the end of the day, it's not clear to me that Sam understands what he did wrong now. Like, for example, what did he do wrong? There's accounting fraud here. There's basically equity fraud by creating an air token. There's all sorts of credit fraud. There's investor fraud, misrepresenting the equity you sold the investors. There's self-dealing. He issued himself loans. There's front running. There's insider trading. There's wash trading. There's such a litany of ethical and legal lapses. But if you look at all the coverage in the crypto, world, they miss the fundamental issue, which is it's illegal and unethical to issue your own air token. I mean, that the entire premise of the industry, an exchange that trades unregistered securities and an issuer of unregistered securities, that fundamentally is unethical everywhere in the world, illegal nearly everywhere in the world.
I have two questions.
And yet they built the business on that premise. On top of that premise, then he inflated the accounting values, built backdoors into the exchange.
It's just not.
So I think if you look at all the blow-ups, right, Celsius, BlockFi, Do Kwon, Luna, Terra, Three Arrows, Genesis, and FTX, all of them were going to blow up at some point because, like Luna, Terra, it was $20 billion worth of a stable coin backed by $2 billion of real assets, and a $50 billion Luna thing that had $50 million a day of real liquidity. So they were all running on 100x rehypothecated leverage, and they were going to blow up. It's just a question of when they're going to blow up. I think that this is it's a painful deleveraging of the entire industry. But if you look at everybody that was kind of behaving badly, like doing stupid things, like again, aggressive lending in the real world is 1.4 leverage. That's insanely aggressive lending. These guys were all running at 20x, 10x.
That's insane
leverage.
To me.
So you had a lot of people behaving badly. They were destined to blow up. It might have been held off for a bit, but I have seen pretty credible evidence circulating in the Twitter sphere that Alameda had already taken a $3 to $4 billion loss in 2021 during the bull market because they were just doing stupid things.
The U.S. government is seeking information about FTX and its key figures, including the company's founders Sam Bankman-Fried and Caroline Ellison, who was formerly part of Alameda Research's leadership. The request is being sent to crypto investors as well as trading companies that work closely with the exchange. The U.S. Attorney's Office for the Southern District of New York reportedly sent out a series of notices which requested the recipients to voluntarily disclose information regarding a list of FTX workers and associates, according to the sources that Bloomberg cited. The U.S. Securities and Exchange Commission is also pursuing a parallel civil investigation into the collapse of the FTX exchange. Companies who invest in or trade on the Bitcoin platform have all received similar demands for information from the government. What do you make of Michael Saylor interview? Please let us know your opinion in the comment section below. Thanks for watching.